Are you losing money in trades even when your strategy seems perfect? It's not your strategy, it's your psychology. The markets don't punish bad setups as much as they punish emotional decisions. In this video, we will expose the invisible mental patterns behind every losing trade, not just what you do, but why you do it. If you're serious about mastering trading, not just technically but mentally, stay to the end. This might be the most honest look into your trading mind you've ever seen. Subscribe now to Whispers of Psychology for more deep dives into the mind behind money. Ladies and gentlemen, before you ever click buy or sell, the trade has already happened inside your mind. You think you're reacting to price, but in truth, you're reacting to emotions. Let's expose what really drives your losing trades. Fear, greed, and impulses. The market is not your enemy. Your emotional mind is. Fear shows up in many faces. Fear of missing out, fear of losing profits, fear of being wrong. It's the fear of regret. So what do? You chase a breakout too late, or you exit a winning position too early. Fear whispers, what if this runs without you? Or what if it all crashes now? It hijacks your logic and replaces it with survival mode. And the market doesn't reward survival mode. It punishes it. Then comes greed. Greed doesn't always mean you want more money. Sometimes it means you want it faster. You double your risk because the last trade was green. You ignore your stop loss because you're sure this will bounce. Greed tells you, just one more win and you'll recover all. But the market doesn't care how badly you want it. It only respects discipline. Greed makes you forget that. Now let's talk about impulsiveness, the silent killer of most traders. Impulses are those sudden trades that just felt right. No plan, no confirmation, just intuition or what you think is intuition. But intuition without experience is usually just emotional noise. And emotional trades often in the same way, in loss and self-blame. The irony is, most traders know these emotions exist. They just don't know how powerful they are. You see a candle breaking out and your heart rate increases. You hesitate for 3 seconds and now you're chasing. You go red and your palms sweat. You try to scalp your way out. Every decision after that is no longer rational. You're not trading charts anymore. You're trading cortisol and adrenaline. There's a moment in every losing trade where you knew better, but you didn't listen. Why? Because in that moment, the emotion felt louder than logic. You wanted to follow your plan, but fear had a stronger voice. You wanted to wait for confirmation, but greed promised quick profits. These are not bad trading habits. These are emotional loops, and if left unchecked, they will become your trading identity. Here's the truth most don't want to face. Your worst losing trades are not caused by market volatility. They're caused by emotional volatility. And until you learn to regulate that, the same pattern will repeat. Different day, different ticker, same outcome. So how do you stop it? Not by avoiding emotions. That's impossible. You stop it by recognizing them before they act. You pause before the impulse. You breathe before the FOMO kicks in. You become aware that fear is speaking and choose not to listen. Emotional discipline isn't about being fearless. It's about knowing when fear is trying to trade for you. Every trade you take is a test of your emotional intelligence. The market shows your reflection, not your skill. If you panic easily, it will expose that. If you chase profits, it will tempt you into traps. The market is the most honest mirror you'll ever face, and always shows you. This is why two traders can use the same strategy and get completely different results. One follows a plan. The other follows his feelings. One trades what is. The other trades what he hopes. And hope is not a strategy. It's an emotional response. So remember this. You don't need a better setup. You need a calmer mind. You don't need a new indicator. You need self-awareness. And you don't need more trades. You need better decisions. In the end, your trading success will not be determined by how much you know, but by how well you control what you feel. That's the real edge. And that's the pattern behind every losing trade. An emotion that went unchecked. You think you're in control. You have a trading plan, a set of rules, maybe even a journal. You tell yourself, this time I'll follow my system. But when real money's on the line and the trade goes against you, something else takes over. You break your own rules. You enter trades you didn't plan. You double down on a losing position. That something else is the illusion of control. The most dangerous part of trading isn't the loss itself. It's how you respond to it. One red trade can trigger a cascade of emotional reactions. And instead of stepping back, analyzing, or accepting it as part of the process, you enter what's known as revenge trading. You're not trading a setup anymore. You're trading your ego. You feel like the market wronged you, and now you need to get it back. But here's the truth. The market doesn't care about you. It doesn't owe you anything. The moment you try to force it to give back what it took, you've already lost a psychological game. This is where overtrading begins. It doesn't start with a logical decision. It starts with a feeling, a sense of needing to regain control. So you place more trades, increase position sizes, shorten your time frames, try to catch every little move. But the more you trade, the more detached you become from your original system. The illusion is that more action equals more control, when in reality, more action is often the very thing that pushes you further off balance. You begin to confuse movement with progress. But not all movement is forward. Overtrading is often a response to internal chaos, a way to silence the anxiety, the discomfort of losing. You're not managing risk anymore. You're managing emotions with your mouse clicks. And every impulsive trade is a desperate attempt to feel in control again. Let's be honest. Most traders overtrade not because they see more opportunity, but because they can't sit with uncertainty. The silence between setups feels unbearable. The waiting feels like failure. And so they trade not out of clarity, but out of discomfort, out of the need to do something. But trading is one of the rare professions where doing nothing is often the most profitable move, where restraint is more powerful than reaction. Here's what you have to understand. Every trade you take is a decision, but not every decision is a conscious one. Most are influenced by what lies just beneath your awareness. Your need to prove yourself, your fear of being wrong, your desire to be right now. And those needs are deeply rooted in your identity, not your system. The illusion of control convinces you that if you just try harder, click faster, analyze deeper, you can outsmart the market. But trading is not about control. It's about alignment. Alignment with your process, with probability, with risk. The moment you try to force outcomes, you disconnect from all three. When a trader loses a few trades and suddenly starts freestyling, adding new indicators, changing time frames, tweaking position sizes, what they're really doing is trying to reclaim control. But what they don't realize is that this frantic adjusting is actually a symptom of internal disarray, not strategy refinement. The most consistent traders aren't the ones who always win. They're the ones who know exactly what to do after they lose. They don't spiral. They don't chase. They don't fall for the illusion that one more trade can fix it. They step back, reset, and return with clarity. That is real control, not over the market, but over the self. You can't control the outcome of any single trade. You can't control the market's next move. But what you can control is your process, your response, your ability to step away when your emotions want you to stay in, your ability to pause when your impulses scream for action. The market will always tempt you to abandon your system, especially when you're emotionally vulnerable. An illusion of control will whisper, just one more trade. You can get it back. But that voice isn't your strategy. It's your ego in disguise. If you want longevity in trading, you have to surrender the need to control outcomes and replace it with a commitment to consistency. You're not here to win every trade. You're here to make high-quality decisions over time. That's the only kind of control that matters. So the next time you feel the urge to take back control by overtrading, ask yourself, am I trading from clarity or am I reacting from chaos? Because the real danger isn't losing a trade. The real danger is what you do after you lose. And if you don't master that, you won't just lose money. You'll lose yourself in the process. You think you're being rational. You look at the chart, analyze the pattern, check your indicators, and feel confident in your decision. But deep inside your mind, something else is happening. Something you're not even aware of. You're not seeing what is, you're seeing what you want to see. That's not analysis. That's cognitive bias at work. And it's costing you more than you realize. Traders like to believe they're logical, objective decision makers. But in reality, we're all subject to deeply rooted mental shortcuts that distort how we interpret information. One of the most powerful of these is confirmation bias, the tendency to favor information that supports our existing beliefs while ignoring or minimizing anything that contradicts them. You want the stock to go up, so you look for bullish signals. You ignore the bearish divergence. You downplay the weak volume. You find one bullish candle and convince yourself it's a breakout. But it's not analysis, it's projection. Every trader enters the market with a story in their head. And once that story is written, your brain becomes obsessed with proving it right. You cherry-pick signals. You interpret neutral price action as positive. You hold on to losing trades because you're still emotionally attached to your original idea. Confirmation bias doesn't just lead to bad entries. It keeps you stuck in bad trades because you're desperately trying to protect your ego from being wrong. Then comes loss aversion, another brutal force that dominates the trading psyche. Studies in behavioral psychology show that the pain of losing is psychologically twice as powerful as the pleasure of winning. That's why you cut your winners too early. You're scared they'll reverse. And it's why you hold your losers too long, because you can't handle locking in the loss. Your brain is not designed to think in probabilities. It's designed to avoid pain. And in trading, that instinct leads to disaster. You don't sell the losing trade, not because you believe it'll recover, but because selling would mean admitting failure. So you hold. You average down. You hope. You lie to yourself that it's part of your plan. But deep down, you know it's fear. Loss aversion doesn't just make you lose more money. It delays your growth as a trader. Because every time you refuse to take a small loss, you miss the lesson it was trying to teach you. And then there's overconfidence, the silent killer of consistency. After a few green trades, you start to believe you figure it out. You feel sharp, unstoppable, ahead of the curve. You increase your position sizes. You take trades outside your setup. You trust your gut more than your process. And just like that, your ego takes the wheel. Overconfidence creates a false sense of security. It blinds you to risk. It makes you forget that one good streak doesn't make a career, and one bad habit can wipe out months of discipline. The market is unforgiving to those who get cocky. It's not there to confirm your greatness. It's there to test your consistency. And if you let overconfidence grow unchecked, it will always end the same way, with a crash that brings you back to humility. What makes these biases so dangerous is not just that they exist. It's that you often don't see them until it's too late. They operate in the background of your mind, subtly influencing your actions while convincing you you're being logical. They feel like intuition, like clarity, like conviction. But in reality, they are emotional distortions wearing a mask of confidence. This is the trap most traders fall into. They focus on charts, patterns, and technical setups, believing that more knowledge will protect them. But knowledge without awareness is incomplete. You can master the market's language, but if you don't understand your own mental language, you will still be a slave to your biases. Cognitive bias is the hidden script behind your worst decisions. It's why you revenge trade. It's why you break your rules. It's why you repeat the same mistakes even though you know better. And unless you consciously begin to observe your thoughts, question your beliefs, track your behaviors, and analyze your emotional patterns, you'll keep thinking you're trading objectively while actually operating from a place of self-deception. True growth in trading doesn't begin with better entries. It begins with better self-awareness. It begins when you stop blaming the market, stop blaming the setup, and start looking inward. Because no strategy can save a trader who lies to themselves. So next time you find yourself justifying a bad trade, ask, am I seeing this clearly? Or am I seeing what I want to believe? Am I protecting my capital or protecting my ego? Am I following a system or following a feeling? The market doesn't punish your ignorance. It punishes your certainty in the wrong direction. And cognitive bias ensures you'll feel most certain right before you make the biggest mistake. If you want to evolve as a trader, you don't need more screens. You need more honesty. You don't need to master the market. You need to master your mind. There's a part of you that trades without your permission. It steps in during moments of stress, overrides your logic and whispers things like double the position, hold a little longer, or you can win it back. This part of you doesn't care about your trading plan. It doesn't care about your risk management. It only wants one thing: emotional relief. And this isn't just bad habit or lack of discipline. It's something much deeper. It's your unconscious mind at work. Carl Jung called it the shadow, the parts of ourselves we repress, deny, or ignore. Traits we don't want to admit we have: desperation, greed, recklessness, fear. In normal life, we keep these parts hidden. But the moment we enter the high-stress, high-stakes environment of trading, those buried impulses come alive, and they start making decisions for us. When you're calm and regulated, you follow your system. But when you're triggered, after a loss, a missed entry, or during a volatile move, your conscious mind often gets hijacked by the shadow. You're no longer trading the chart. You're acting out emotional patterns rooted in your past. These patterns might come from childhood trauma, scarcity mindsets, the need to prove yourself, or unhealed shame. The market becomes a stage where all of this unresolved energy gets projected. You think you're losing money because of the market, but often you're losing because you're in a battle with a part of yourself you don't even know exists. The unconscious doesn't speak in language. It speaks in impulses. That sudden urge to enter without confirmation, that's not strategy. That's shadow. That refusal to take a loss and let go, that's not analysis. It's ego protection. When Jung said, "Until you make the unconscious conscious, it will direct your life and you will call it fate," he was describing this exact loop. Every trader has patterns, but not every trader sees them. You might notice you always break rules after a winning streak, or that you always increase size after a loss. These are not random habits. They are psychological scripts that repeat until they're confronted. Some traders sabotage when things are going well, not because they're unlucky, but because deep down, they don't believe they deserve success. Others enter massive risk out of desperation, not because the setup calls for it, but because they're unconsciously trying to escape feelings of failure or inadequacy. This is why pure technical skill isn't enough. You can master every chart pattern and still blow up your account, because a hand clicking the mouse is being guided by a force deeper than logic. Until you bring that force into the light, you will continue to repeat self-destructive cycles, blaming the market while the real issue lives within. Trading isn't just a financial pursuit. It's a psychological mirror. It reveals who you are when you're under pressure. And if you're not prepared to confront what it shows you, trading will become emotionally exhausting and mentally damaging. That's why so many traders burn out. Not because they can't learn the market, but because they never learn themselves. True trading mastery doesn't come from more indicators. It comes from inner integration. It means recognizing your shadow when it shows up and choosing not to act from it. It means pausing when you feel the urge to revenge trade. It means asking yourself, where is this decision coming from, strategy or emotion, clarity or compulsion? This level of self-awareness takes work. It means journaling not just your trades, but your feelings before, during, and after them. It means reflecting on emotional patterns that keep showing up in your results. It means being brutally honest about your fears, your weaknesses, and your motives. And most importantly, it means taking responsibility, not just for the trades you place, but for the trader you are becoming. The shadow is not your enemy. It's a part of you asking to be seen. When you deny it, it takes over. But when you acknowledge it, you reclaim your power. You gain choice. You gain clarity. And in that clarity, you begin to trade with presence, not panic. With discipline, not drama. So, if you're serious about becoming a consistent trader, the real work isn't just outside. It's inside. It's in the quiet moments when you choose to observe your emotions instead of obey them. It's in the space between the impulse and the action. That's where mastery begins. Because at the end of the day, the most dangerous force in trading isn't the market. It's the part of you that trades without your permission. And until you meet that part face to face, it will always trade your account and your potential into ground. After everything we've uncovered, the fear, the greed, the illusions of control, the unconscious patterns, one truth becomes undeniable. Your biggest opponent in trading isn't the market. It's your own mind. Every losing trade isn't just a technical failure. It's often a psychological one. It's a decision shaped by unseen forces, by emotions you don't fully understand, and mental patterns you haven't yet confronted. You chase, you freeze, you overtrade, not because you lack skill, but because you're reacting to internal chaos you haven't yet named. The market is neutral. It doesn't care who wins or loses, but it does reward those who bring clarity, emotional balance, and self-awareness to every decision. The edge you're looking for won't be found in a new indicator or a faster entry. It will be found in your ability to master your responses, to pause in the face of impulse, and to act from a place of calm intention rather than emotional reaction. The truth is, you don't need to control the market. You need to understand yourself. Because until you do, every trade will be a reflection of unresolved emotion disguised as strategy. But the moment you turn inward, the moment you begin observing your triggers, your patterns, your shadow, you gain real power. You stop being a victim of the market and start becoming the trader you were meant to be. Mastering trading isn't about perfection. It's about awareness. It's about discipline. And above all, it's about facing the parts of yourself that most people spend their whole lives avoiding. And that, right there, is a hidden pattern behind every losing trade. Break it and everything changes.